All right, so we're back after having gone through the moving averages, the RSI, stochastics, and the KLAC plays. We're going to jump into pivots. And I know some of you in here have viewed the CD for the 5-minute pivot strategy, and some of you have not. And basically that the CD is a very, very detailed compilation of how to use the pivot plays. And what we're going to cover in here, it's still very detailed, but it's really just going to cover the stuff that you need for all these other plays. And what you're going to find is that all these strategies that we're talking about build upon each other. So we talked about the gaps. Then we talked about the moving averages. Well, the pivots we use in conjunction with gaps and moving averages. And then tomorrow when we talk about squeezes, we'll be using those in conjunction with gaps, moving averages, and pivots. So it's important that you understand each one of these pieces of the seminar before we move on to the next one. And so the pivot plays will jump into that. Sarah, you're asking, is it the same CD that's on the website? Yes. So that's what we're talking about. There's actually a CD that we put out that explains the 5-minute pivot strategy in detail, and that's very, very detailed. It pretty much covers everything that you want to know. And in here, we're going to go through all the key parts so you know how to still do the setups. The main difference is on that CD you have like 20 or 25 or 30 live trading examples. Here, we just want to get you familiar with the concepts so you'll know what we're talking about when we use the pivots on Monday, because the pivots play a super important role on the intraday trades that we do. All right. So one of the things that I really like about the pivot plays is that I was talking earlier in the day how somebody can know a lot about a particular market, but because of their own, maybe they're too impulsive in their trades, or maybe the setups that they're using aren't correct. The one thing I like about pivot plays is that if your weakness as a trader is being impulsive, the pivots will keep you more in line and a less emotionally biased trader. Because basically by using the pivot strategy, you're never using market orders. And in my experience in working with people, anytime that you're relying mostly on market orders and your weakness is impulsive trading, you're basically just setting yourself up for disaster. You're not going to ever make any money consistently trading. Pivot plays are a good strategy to use if you have identified one of your trading weaknesses as being impulsive, because everything about the pivot strategy is very, very methodical. So why don't we do this? We're going to jump in. I'm going to show you what formulas I use for pivots and how I set them up, and then we'll talk about the trading methodology that I use with the pivots. The main thing to remember is that with pivots, there's no secret to how they're used or anything like that. The pivot strategies have been around for a long time. Basically, floor traders have started off using them as ways to kind of calculate different support and resistance levels in the market. Now, the difference is that there are a few different ways to calculate the pivots, and so I want to share with you what I use to calculate the pivots, and then we'll go ahead and talk about what I do with them. So this is the exact formula that I use. Basically, for the actual pivot strategy, what I'm taking is the pivot. To calculate the pivot, I just take the high and the high plus the low plus the close and divide by 3, and that's pretty normal. Sometimes you'll see formulas that have the high, low, close, and open and divided by 4, but I found that this pivot works more accurately. And then what I do is I'll calculate R1. I'll just take the pivot times 2, subtract the low, and I get R1, which is resistance 1. Pivot plus the high minus the low, I get R2, which is resistance number 2. And then R1 plus the high minus the low to get the resistance 3. Bradley's asking, is it the high, the low, and the close divided by 3, or just the close divided by 3? Yeah, it's the high. You take the high, the low, and the close, you add them all together, and you get 3. So if you have 9,000 as the high, 8,000 as the low, and 10,000 is the close, that's 19,8. What is that? That's like 17,000. You divide it by 3, and then that's the number. My math was probably wrong, but you want all those numbers, okay? And so that's how you get the levels. Now, I have seen that for R3 and S3, there's a couple of different formulas out there. One of the ones is that you take R2 plus the high minus the low. I like R1 plus the high minus the low. I've just found it's more accurate and that the market more frequently hits those levels. So now, once you have the formula, you got to make sure that you have the right data. And the main data that people use is the high-low close of the regular session or the high-low close of the overnight session. What I like to do is I like to take the entire 24 hours worth of data. So I basically use the regular session plus the overnight session. So what exactly am I using? If it's basically what I would do is Tuesday at 4:15 p.m. Eastern, that would be the end of my data for Tuesday. And when the markets reopened again on the S&Ps like at 4:30 p.m. Eastern, that's when my day would start for Wednesday. So for Wednesday's data, I would start recording data at 4:30 p.m. Eastern on Tuesday, and I would end the recording at 4:15 p.m. on Wednesday. Okay, does that make sense? What that does is that captures 24 hours worth of data, and it also gives you an accurate close, right at the 4:15 level. And so, I like to take into account what's happening on the overnight action as well. And what I'll do then is I'll take that high-low close, and I'll put it into that pivot formula, and that's going to give me levels for the day. Now, not only will I take the high-low close of the previous day, I'm also going to take the high-low close of the previous week and the high-low close of the previous month. And I will also get levels from there. So I'll have a weekly pivot, a monthly pivot, and a daily pivot. And then I'm going to have daily R1 through R3, weekly R1 through R3, and monthly R1 through R3, and so on. And I'll have different levels like that. I have just found that a lot of people do use the cash session, and they do work okay. I've just found that the overnight number, when the overnight levels are included, they just become that much more powerful. Whereas on a daily session, the markets can have a tendency to push through those levels. On a Globex session, that level's going to hold it more often than not. So that's why I like to use those, because it's taken into account the entire market action. Now, one thing I've done is that I was telling you about the 4:15 to 4:30. One thing I've done on the mini-size Dow is I've done different experiments using a 4:15 close or a 5 o'clock close, because the session on the Dow closes at 5 o'clock as opposed to 4:15 like the S&P and the NASDAQ. And really the jury's still out on this. I have found that the 5 o'clock close is actually just as accurate, if not a little more accurate, than the 4:15 close on the Dow. So I found it's not too big of a deal. The only time I found it's a big deal is if there's a major earnings announcement, like at say 4:30, and that affects the after-hours market in the Dow significantly. Then I'll go ahead and I'll take into account the 4:15 close as well. But I like using the 5 o'clock close because I'm also going to have the 4:15 close on the S&Ps to balance that out, and so that way I can watch both of them. Question by Sarah: do you use the actual month or do you use the monthly? Do you roll the monthly into 28-day months? I use the actual month. So right now for August, my monthly pivots for August are the high-low close of July. So I don't use a rolling 28 days. I actually use the last physical month. And the idea is you want to use an actual bar on a chart. So the monthly bar on the monthly chart for July, I use that to create the pivots for all of August. So I only change the monthly pivots 12 times a year, so they're pretty easy. The weekly pivots only change 52 times a year, and then the daily pivots, of course, change every day. So I don't use rolling data. I just use last week. Once I get last week's pivots, it's static, and then same thing for the month. If you guys have TradeStation, it's a real easy way to do this. If you just use the continuous symbol, which is @YM, that'll give you the high-low close that you need, or @ES or @NQ or @ER2 for the Russell. That'll give you all the high-low close numbers that you need. I also publish these every night in the newsletter, so you can compare your numbers against those to make sure that you're getting the right pivot levels. So basically, once I get the correct formula, and then I get the correct high-low close, I just punch them into that pivot formula, and I get my levels for the next trading day. So for example, on this particular example, we had a high of 1078. We had a low of 1048. Sarah, that was that's for TradeStation. For eSignal, you just want to make sure that you've got 24-hour data. I think on eSignal they default to the cash session. Just make sure that you go to chart. Just go to the chart and make sure it's 24-hour data. Okay, and then there's the close. So you take the high and the low and the close, you divide by 3, and that gives you the pivot. Okay, and then you use the rest of the formulas to get the R1 through R3, which are going to be the resistance levels for the day, and S1 through S3, the support levels for the day. Then once these are done, I just draw them physically on my chart so I can see basically a representation of where those levels are going to be for the entire day. What I found is very important with pivots is that pivots play a very strong role when you've got a trending market. And what happens is if you've got a strongly trending market, the market will, let's say we've got an up move. The market is going to rally to a pivot level, and then it's going to pause, and it's going to consolidate for like 20 to 30 minutes. And then it's going to build up energy and build up momentum for the next move, and that'll be to the next pivot level. So what you can do is when you see a market move to a pivot level, and instead of pulling back, it just consolidates, that gives you a heads up that the market is in a continuation phase, and it's just building up energy for its next move higher. So that's pretty important. Conversely, is if you've got a choppy market, basically what you'll see happen is that a market's going to rally to a pivot level, and you're immediately going to get a lot of selling there, then the markets are going to reverse and fall to the next pivot level, and then they're going to bounce off that level and go back to the next one. So you'll find that on choppy sideways days, the market's just kind of ping-pong back and forth in between these pivot levels. Since there's really nothing to do, what happens is the futures traders, they just push them up to one level, dumping them off, riding them down to the next level, dumping them off. And so if you know where the pivots are, you can sit there and short rallies to the pivots, and then cover and reverse and buy and declines to the pivots, and basically stay on the right side of the chop all day long. The other thing that's important to realize with pivots is that it is very, very rare for a market to hit its R3 or its S3 levels, because that's a real extreme move of the day. This is going to help keep a trader emotionally balanced and keep them tempered, because what will happen, and I see this all the time, is when the market starts rallying or the market starts falling, people just lose all rational thought. And it's like, oh wow, the market's rallying, we're going to go up forever. Or the market's falling, this is going to be a crash day. Well, by the time you get to like R3 or S3, guess what? The move is basically over. So if you're in a position long and you've already gotten up to R3 and you're just a day trader, guess what? It's time to go flat. The move's over. So there's no reason to pile on additional contracts, looking for additional moves, because the chances are like 10% that this market's going to move any higher, and they're 90% that the market has already put in its high for the day. So it's really important to know for the R3s and the S3 levels. It's also important to know that if a market hits its R2 or S2 level, you've got about a 90% chance that the high or the low for that day has been hit. The R2s and the S2s are very good for marking pretty much the highs and lows of the day. So if you've got a market that's fallen to S2 and it's the doldrums, you got a pretty good chance that that might be the low of the day and the market's going to turn. So those are also extreme moves and also very crucial market turning points. So you definitely want to know where the daily R2 and the daily S2 levels are. You can see this is on this particular day right here. This is when some employment numbers came out. And what I did on this chart is I marked the daily R3, the daily R2, the daily S2, and the daily S3. And we had a nice extreme move. We gapped down pretty hard, and we gapped down almost into S3, and then the markets reversed and just took off. And where did they stop? I mean, they rallied hard for like half an hour. I mean, they almost moved 150 points on the Dow. Where'd they stop? They stopped at R3, and that held them in check. And then they basically spent the rest of the day trading back and forth around the pivot, as you'll see on the next chart. Now, the central daily pivot is really important, because what will happen is that if you open above the central pivot, you've got a huge chance that the markets are going to actually come back and test that pivot at some point during the day. So if the markets open below the pivot, same thing. So I'm always looking for, if the markets gap higher, I'm always looking, okay, now where is the central pivot? Is the central pivot below? That's good, because that gap has a really good chance of coming back down to test that pivot. So I like to see where that daily central pivot is in relation to the previous day's close and see if they line up at all. So let's take a look at this chart here. So that chart that we just looked at, now, here it is with just the pivot. So you can see what will happen is that, the markets on this particular day, they gap down right near the pivot. They push lower. But now they can't resist, so they come back and test the pivot and push higher. And then they spend a lot of time right here trading around the pivot, come back up, come back down to the pivot, trade around the pivot, and close right on the pivot. So the pivot basically acts as a magnet throughout the trading day for markets. And so you just want to be cognizant of that, because if the markets are trading well below the pivot, you've got a good chance that we're going to come all the way back up and test the pivot. And vice versa, if we're trading above the pivot, look for the markets to come back down and test the pivot again. So the pivot's kind of the fence for the markets. It likes to play on both sides of the fence. Anytime you're moving up through the pivot, that can be a buy signal. If you're moving down below the pivot, that can be a sell signal. And then at the same time, when you start moving away from the pivot, you look for that pivot to start acting kind of as a magnet, especially if it hasn't tested it yet on that particular day. So we've already talked about the weekly and monthly pivots. The main thing I want to add here is that I found that most traders, they don't really watch these. And what will happen is if you don't know where the weekly and monthly pivots are on a chart, you'll see that the market will make, people that aren't watching it, the market will suddenly stop and reverse. And if you don't know where these monthly and weekly pivots are, you're going to look at that and wonder, gosh, what did it do? I mean, the markets were going fine, and all of a sudden they just changed direction. Well, most of the time it's because it hit a monthly or weekly pivot. And if you don't know where they are, you're going to be baffled by certain times when the market turns. So that's why you want to calculate those. So this is what will happen here. Oh, let me add this too. Let me back up. The other thing I use for pivots is that, okay, so I got the daily pivots, right? Then the weekly pivots, and then the monthly pivots. Now, on days where you've got a wide range, like let's say the day before the Dow had like a 100-point range, which is kind of wide, and it's going to create wide pivots. I will also then calculate the midpoints of the daily levels. Okay, so if I've got daily S1 is 10,000 and the daily pivot is 10,100, I'm going to draw a midpoint literally right between those two levels. So I'll have a midpoint level at 10,050. I found these levels are almost just as strong as the pivots and are great levels to add positions and take positions off. Okay, so they're great for using targets like that. And you can see on this chart here where you've got, you can see you've got the pivot right here, and a midpoint right here, and a midpoint right here. And look how the market is ping-ponging back and forth between these levels. We come down to the midpoint, rally up through the pivot, come up to the midpoint, rally back down through the pivot, come down to the midpoint, spend some time chopping around the pivot, come down to the midpoint, chop around there for a while, and then fall to S1. So these midpoints act as great levels to buy against and sell against when they have wide range days the day before. Now I'm taking that same chart and I'm adding the monthly levels in there, and then you can see this kind of completes the picture. What I like to see is if there's any confluence on any of these pivots. So if I've got like a weekly pivot right here, right next to a midpoint, it's going to make that level that much stronger because you've got confluence. You've got two pivot levels kind of for the price of one, so it makes it that much stronger. You can see here that on this monthly level right here, you do have some price action around there that's holding it down, where the markets kind of react to that. So it's just important to know where these levels are. And for me personally, if I'm not looking at a chart that doesn't have all four of those levels on it, I feel like I'm kind of trading naked because those are great levels for entries and exits. There's no reason to chase like a breakout at the market because you're always going to get another entry on a pullback to a pivot level. So that's why I use them. Bradley, that's a good question. Is there an arbitrary range between S1 and the central pivot where a midpoint should be drawn? Yeah, what I found is with the Dow is if there's at least 40 points between S1 and the pivot, I'll go ahead and add that midpoint. And for the S&Ps, that'd be 4 points. So I found that that's a generally good rule of thumb. Jim, yeah, I do use the midpoint. Sorry, Jim's asking, do I use midpoints on the weekly and the monthly also? Jim, I don't. I did look at them for a while. I just found that it just kind of started throwing too many lines on the charts, and I found that they did not play a significant role in these things. So I don't draw those. Yeah, Malcolm, that's one of the things that you can do with pivots. If you combine them with other levels, if you've got a pivot level that combines with a key Fibonacci level or a market profile level, it just makes it that much stronger. So one of the things that we do in the trading room is we get where the market profile levels are and see if those are lined up with any of the pivot levels. And the pivot levels will stand good on their own, but if you're familiar with some of those other techniques, it'll just make them that much stronger. Oh, the market. Justin, the market profile, basically in a nutshell, this is really it's actually a pretty complicated thing to look at, but it's pretty easy to understand. Market profile has to do with kind of the simplified version is where most of the trades are firing off. And it was a method invented by somebody over at the Chicago Board of Trade. So if you've got a lot of volume around, say, one specific price level has the most volume, that'll set up a market profile level. So you're looking at basically it's a combination of time and price. Time and price and volume like that. And it's a good tool. It's not something that we actually cover in this, but we do use it in the trading room. And it's one of those things where it's just important to know what the levels are. It's actually easier to find somebody to calculate them for you than trying to learn to do it yourself for us. But we're actually we've had a lot of people asking about that, so we are actually looking at putting together something on that. But we do call out those levels every day in the room. All right, so the main thing with the midpoints is just... Oh, thanks, Malcolm. Yeah, they've got a free kind of a tutorial there at the CBOT, so you can look at it there for market profile. So the important thing you need to know about midpoints is you don't need to use them all the time. If you've got if you got a day where the pivot, the relationship between the pivot and S1 is only like 20 Dow points, well, then you don't need to use the midpoint. They're really helpful on wider range days like that. Now, the other important thing that I like to do is when I'm drawing these on a chart, I like to differentiate these by using different colors. And what I personally do is I use yellow for the daily levels, light blue for the weekly levels, purple for the monthly levels, and then white for the midpoints between the daily levels. This way I can see at a glance that, okay, we're rallying up to, weekly S1, because I'll know that by the color and what it is and where it is in relation to everything else on the chart. And I find that that's pretty helpful. That way you don't have to look it up every time it goes there. Now, I've told you all the formulas and stuff like that. You certainly do not have to calculate these by hand every night. What I do personally, yeah, Sarah, I will. And when I show you the charts that I use on Monday, you'll see how they're set up. But it's basically yellow for daily, light blue for weekly, purple for monthly, and white for midpoints. And I use a chart with a black background. Oh, I'll have to retype it. Okay. Yellow for daily, light blue for weekly, purple for monthly, white for midpoints, and then I use a chart with a black background. Alright? I think I may have some examples of this too. If not, you'll definitely see it on Monday. So I have an Excel spreadsheet that I use to enter in all this information. So if you guys want this Excel spreadsheet, just email me at jcarter@tradethemarkets.com, and I can email you the spreadsheet. And then all you got to do is just punch in the high-low close for the daily, the weekly, the monthly levels, and it'll calculate everything for you. It'll calculate the daily levels, the midpoints, the weekly levels, and the monthly levels for you, and then that way you don't have to try to calculate any of this stuff by hand. So it saves a lot of time. Now, what I used to do with these pivots is every day I would sit there on the Dow, the S&P, the Russell, and the NASDAQ, and I would place all these pivot levels on by hand every day. Part of me thought this was good, that even though it took half an hour to painstakingly get all these horizontal levels at the right place, part of me thought it was good because it could sit there and instill in my mind exactly where these levels are. Then later, I basically got some software developed that drew these for me automatically on TradeStation in those same colors that I'm telling you about. And so it saves me like half an hour each morning, and that was really nice. So basically, and the thing about it is like there's automatic pivot software, but it was always wrong based on the numbers that I use. So on this software, I just punch in my high-low close, and then it draws the lines for me, and they're exact, and it's really fast. So I really like that, and that's what I do these days on TradeStation. All right, so here's an example of how my chart looks when I'm using pivots. So you can sit here and see that what I do. Okay, let's just go through the dailies. All right, here's the daily pivot right here. The daily pivot is yellow, and it's solid, and it's a thicker line. Okay. Now if you go down to daily R1, it's yellow, but now it's a dashed line. Okay, sorry, daily S1. And daily S2 is also yellow, but it's a dashed line. So this way I can glance and say, okay, there's the daily pivot, there's daily S1, and there's daily S2. And on the pivot software I'm using, it'll actually label those, S1, S2, daily, all that, which is very helpful. And you can see on the same chart, up here you'll see here's the weekly pivot. Now you don't see any of the other weekly levels because they're wide enough where they don't show up on this chart. But you can see right here, here's a purple line. That's a monthly pivot level, a monthly S1 or R1 level. There's another monthly level. Right here you can see this is a white dotted dashed line. That's the midpoint between the pivot and S1. Okay? And you can see that as the markets are moving here, they kind of move down to the midpoint, retrace back up to the monthly, move down to S1, consolidate. When they come down, they retrace back up to S1, consolidate, boom, fall to the midpoint, consolidate, fall, to S2 and consolidate. And that's typically how the markets will move during the day. They'll just sit there and ping-pong back and forth these levels. And so instead of chasing markets, you can use these pivots to give you more precise entries. That's why I'm never having to use a market order when I'm playing pivot strategies, because I can sit there and use limit orders that are already placed and already basically first in line for when the market moves to these directions and moves to these levels. At the bottom, this is just a 7-period RSI, and that's what we use. We'll just use it to look for bullish and bearish divergences, which we've already talked about. Sarah, the software is available for TradeStation. We are developing it for eSignal, and we'll show you basically how we set up the charts and everything like that, so we can get you squared away on that. Yep, no problem. So for the pivot charts, what I like to do is you can use pretty much any time frame here. You can use 1-minute charts, you can use 5-minute charts, you can use 15-minute charts. I personally like to use 233 tick charts. Now, some of you may not be familiar with what that means, but let me tell you what they are and why I like them. First of all, what a 233 tick chart does on the S&Ps is every time there's 233 trades, it creates a bar. If the market's moving really fast, then it's going to create a new bar like every 25 or 30 seconds. If the market's moving really slow, it's going to create a new bar like every minute or two. And what will happen is we've got some software that we developed to help find market turns that works very quickly on these 233 tick charts. These are called scalper buys and scalper sells. I'm going to explain to you how those work tomorrow, but I just want to kind of give you an idea of why we're using faster time frame charts like this. Also, now, why am I using a 233 tick chart as opposed to a 500 tick chart or a 100 tick chart? 233 tick chart, basically that's, if you go back to Fibonacci's, it's a Fibonacci level. So that's one of the main reasons. And we've just found that that particular level seems to work pretty good for finding market turns. And so that's why we use that. On the YM, we'll actually go down and do a, let me type this in here. So for the ES, we'll use a 233 tick chart. And then for the YM, we'll use either a 144 tick or an 89 tick chart. And again, you'll see these when we do live trading on Monday. You'll see how we set these up. Jim, yeah, I do prefer the tick charts. I mean, volume charts is another way to do it. I personally like the tick charts. We've used both, and for some reason with the stuff that we do, we get a little bit better results using the tick charts. For the actual charts, as you'll see when we set them up, I personally like to use a black background on my charts. I've found that when you can use a black background, then everything else that you can put on the chart will stand out just that much brighter. So if you can use, if you've got your candlestick set with green up and red down, they stand out really clear and crisp against a black background. The yellow pivots, the blue pivots, the purple pivots, the white pivots, they all stand out sharply against the background against a black background. So that's the main reason I like to use the black backgrounds. Indicators, again, it's the same thing. I like to watch the 7-period RSI, the 821 EMA. You'll see that as we go through all these setups, that we're using the same setups that we use in other markets. One question I get on the pivots, before we get into the actual trading strategy with pivots, is one question I get frequently is, why do they work? And there's two main reasons why they work. One reason is that a lot of people watch pivots, so they become kind of a self-fulfilling prophecy. But there's other levels that other people use that don't work nearly as well, and so there's two other reasons why the pivots work so well. So let me just tell you a little bit about this. Basically, what happens is the pivots work well because if you can imagine, if you guys have never been to the pits before, like on the CME, you've got the S&P pit. You just picture a big circle, and you've got a ton of guys in there, and the most experienced ones are in the very center of the circle, and the less experienced, the further away from the center, it's basically the newer the trader, because as you stay there and you get your position, as people fall out, you get to move closer and closer to the center where the action starts. So what will happen is in the pits, the traders will get into a trade, and it'll start moving, and the guys in the center of the pit will basically hand it off to the guys on the outside of the circle. And by the time that's happened, like a point or two has already gone by. So basically, it's the guys on the outside of the circle, they're the latecomers from the guys who are starting the action in the center of the pit. Well, these guys on the outside of the circle have to find someone to sell it to, and guess who they sell it to? They generally sell it to the public. The public ends up buying it, and by that time they're putting in the high of the day, the high of that move, and now the market starts falling. Well, what I found is whatever that relationship is, it's generally about 2 to 4 points on the S&Ps, or 20 to 40 points on the Dow, and the pivot levels measure these same emotional levels almost exactly. So basically, by the time the market gets to a point where the guys in the pit are handing off trades to the people, to the retail traders, that's generally, the market has already generally rallied into a pivot level. So what happens is, you've got Joe Investor out there buying the S&Ps or buying the Dow right against a pivot level, and guess who's selling it to them? Those guys back in the center of the pit. So now they're just playing the pivot level, except they're going to play it on the way down. So how you stay on the same side as the guys in the pit is you generally will fade moves to pivot levels in these quiet markets. Now, not every pivot's going to repulse the market, but that's going to go back to the intraday indicators that we talk about, and we'll show you that on Monday. But what you generally want to do is you want to fade moves to pivots, and then that way you'll be trading on the same side of the guys that are doing this in the pit. Also, what will happen is that a lot of times, a lot of traders trade solely on indicators, and indicators are generally lagging behind price action. So if you're playing pivots, you're playing a pure price action-based strategy. And if you're getting in, like say the market's rallying up to a pivot level, and you get to short at that level, what's going to happen is that the sell signals that people follow are going to happen like 10 or 15 minutes later. So you're already going to be in the move. The people that rely just on indicators, if they're just indicator-based traders, they're behind the curveball, and that's what's going to also cause these pivots to work. Because what will happen is that the market rallies up to a pivot level, it starts to drift back, and as it's drifting back, some sell signals go off, and people start shorting. This new selling interest then pushes the market down to the next pivot level. So that's why if you use the pivot levels, you're basically getting in early, and you're getting out with a specific target in place. And these things work remarkably well, and this is something that you're going to see us trading live on Monday. Okay, this next slide on page 120, I just talked about all this. It's all written down there if you want to read through it. And on page 121, I've already talked about all that, so if you guys want to read through that. What I want to do now is start talking about how these actually work. All right, so let's get to page 124. Do you guys have any questions? We'll take a quick pause here. Do you guys have any questions on how the pivots are set up? What I wanted to make sure is that you guys understood how to set up the pivots, why they work, and now we're going to go into the specific trading methodology that I use for trading pivots. All right? So, here's what I do to play pivots. Now, all these examples are going to be with the mini-sized Dow. You can use these for S&Ps too. I found that they work a little bit better in the Dow, but you can use them for the S&Ps, and I can go over the parameters that you would use for those as well. So, here's some typical pivot plays that I would use. As you can see here, basically the market's open here, and we basically are going to take the first fade. All right, the market's open at 9:30, right around here. All right, so I'm basically going to set up a sell order at the midpoint, and a buy order down here at this pivot. And what happens is we first come up here and rally, so I get short, and then the markets come down and fall, and I cover. Alright, so that's just like the basic essence of a pivot play. Once I get out of the first play, now, had the market fallen first, if we started here and had the market fallen first down to this level, I would have been a buyer first. But in this particular case, it happened to rally, so I was a seller. Now, the next trade is once this gets filled and it starts hanging around here, I'll set up another buy level at this pivot point, and then once we get filled, my target is going to be basically the next pivot level. And this takes a little while to fill, but what happens is that, fundamentally, nothing has changed, and I just basically stay in this play until it's done. Now, this is the simplified version. I'm going to go through and show you guys a couple of examples and a couple of things that you can use to kind of enhance your trading results using pivots. Now, yeah, Justin, all these trades that we talk about, the first thing that we're doing is we're looking at our radar screen. So let me back up. That's a great question. If we've got a radar screen that's mixed on the day, and there's a lot of days where it's mixed, I will sit there and I'll take both long and short signals. However, when you have days where it's strongly pointing to a downside market, then what I'm going to do is I'm going to ignore buy setups. All right? So in this particular case, I would have shorted a rally here and then covered it. Then I would have just waited for the next sell signal. And in this particular case, the next sell signal didn't occur until we rallied back up to this level right here. So in that case, I would have passed on this trade. All right? So that's when I talk about it and say, okay, look, we're not going to take any long signals today. So this is a long signal that on a day when the radar screen was, the trend's making higher highs, the put call's at 0.50, I'm not going to do anything on the long side. So this is an example of a long setup that I would not take on a day like that. Okay? Now, one of the things I like to do is I like to get slightly in front of the crowd with these pivot levels. So what I do on the Dow is I'm always talking about, in the room, you're always going to hear me talking, all right, our target's S2 plus 3. Okay? And a lot of people in the room don't know what I'm talking about. What I'm talking about is that I want to get a little bit in front of the crowd. So whatever the pivot level is on the Dow, I'm going to add or subtract 3 points, depending on what direction that we're going. Okay? So if here's a pivot level right here, let's say, this line, and let's say it's 10,000. Wow, I can really do this, right? Yeah, I know. I'm doing this with my right hand, and I'm a left-handed person, so that shows you that. So let's say this is a pivot level, and it's 10,000, and we're falling. Okay. What's going to be? Let's say we're falling, and I want to pick up a long. What's going to be my entry? Does anybody know? What entry level am I going to use? Yep, there you go. So yeah, see, it's a very simple concept. So basically 10,003. Nope, you guys, the 10,003 are correct. The reason is that you're going to use it on the same side of the market that you're trading. All right. So let's go back and look at this example again. So you got a line here. All right, that's 10,000. So if the market's falling to 10,000, then you're going to be a buyer on a decline to this level, then you want to get in front of the move. So you want to buy at 10,000 plus 3. All right? Does that make sense? Now, when would you use 9997? If you're going to use 9997, that means you're down here and the market's rallying and you want to short. Okay? So you're going to short at the pivot level, but you're going to get in front of it by 3 points. So you're going to short down here at minus 3. So that's where you use 9997. Okay? Does that make sense? once you understand that, that's gonna save you so much confusion, because I know a lot of people in the trading room, I'll just sit there and go, all right, my target is, I'm short, we're falling to the pivot, I want to get out at S1 plus 3. And people that have gone through the course will know exactly what I'm talking about, and otherwise a lot of other people are confused. But it's very simple. You just want to make sure you understand it. Now, one thing is to understand is that I will use the plus 3 or minus 3 on all the daily pivot levels, the weekly pivot levels, and the monthly pivot levels. On the midpoints, I do not add the plus 3 or the minus 3. I just use the level as it stands. So if the midpoint is right here at 10K, let's say that's a midpoint instead of a pivot, then when I'm coming down, I'm using 10K as the buy. If I'm coming up, I'm using 10K as the sell. All right? So that's just the simple process. If it's a pivot, I'm going to add 3 or subtract 3, depending if I'm falling to the level or rallying to the level. If it's a midpoint, I'll use the price as it stands. All right? Now, when I'm playing pivots, I never use market orders with one exception. If I'm in a play at the end of the day and my stop or my target has not been hit, I will get out at the market at 4:10 p.m. Eastern. That way, I don't want to hold the trade overnight. I got to get out sometime. And I'll generally find that the market action after 4 o'clock, it's a thinner market. The price action gets a little crazy, so sometimes you can get some nice addition to your trade. And so that's the only time I'll use a market order when playing the pivots. Okay? Now let's look at another example here. All right, let's go to page 126. And on this particular example, you can see that the market is just bouncing back and forth between these pivot levels. And the first trade of the day, you're basically the market opens. And I set these up after 9:30. So at 9:30, we're like right here. And so what I do is I set up a buy at daily pivot, at the daily pivot, and then up here at the midpoint. We come down here, but we don't get close enough for an entry. That's not quite daily plus 3. And we've got 2 levels together like that. I like to defer to the daily level. So even though we've got a weekly here, I'll still use the daily level. I know when I see the weekly level there, I just know that there's that much more confidence that level is going to hold, but I'll still trigger my entries off that daily level. So we come down, we get to like daily plus 5, which isn't enough to fill. So I just kind of sit there. The market then rallies up to the midpoint, which is here. It gets there almost exactly. It pushes a little bit through, and I get short. So what's my target? My target's the next pivot level below. Again, when we fall, once we get down here, when we get to daily pivot plus 3, that's my target, and that's where I get out. And once that happens and I'm flat, I'm then going to stand aside for a few minutes and see how the market behaves before I set up my next trade. So, in this particular case, we've come down, I'm flat, I get my target. The market starts to bounce up again, and on this particular day, the radar screen's bullish, so I want to focus on buying pullbacks. Plus, we've got the daily level here, and we got a weekly level here that's strong support. So after that initial bounce, I'll put in my buy, daily pivot plus 3. So what happens is shortly thereafter, we come down, and very quickly we get filled. And so now my target is the next level. And on the upside, the next level is the midpoint. And you can see we rally, we pull back a little bit, and then hit the midpoint. And now I'm out of the trade. Okay? Let's go to the next slide, because then it shows what happens on points 4, 5, and 6. Okay, we just talked about number 3. Okay, let's go to slide 128. So on point number 4, Now, the point to remember, the important thing to remember with pivots is that these trades, you're not generally in these for like 3 or 4 minutes. I mean, sometimes they can go quickly, but you can be in these trades for hours. On this particular one at point 3, when we get on as a buy, we're not getting out of this thing for like 2.5, 3 hours. So what I'm doing is I'm just setting my parameters, and I'm just letting the trade work itself out. And we're going to talk about stops here in a moment. So it's important to realize that once we get up to that place, we'll get up there, and it's not a matter of trying to finesse the market, trying to outthink the market. I've always found one of the things I really like about the strategy is that if you find that one of the things that gives you trouble in trading is that once you're in a position, you tend to talk yourself out of it. The pivot strategy is a really good one to use to get out of that. Sarah, that's a really good question, and that's something I will talk about. Would I ever enter a pivot play during the doldrums? And the answer to that question is no. Between 12 and 2, I will not take any new pivot plays. However, I will manage an existing play. So on this particular trade, you can see we got in at about 11:30, just before the doldrums started. So I basically, and this is why it moved so slow, is that it was during the doldrums, and you can see it took like 2.5 hours for it to fill. Now, if for some reason I would have missed this trade and would have come back down like here, like around 12:50, I would not have taken the trade because it's the doldrums. Okay, so that's one of the rules. Oops, let me get this here. One of the rules is no new trades between 12 and 2 Eastern. But it's okay to manage an existing trade. Okay? So now what I want to do is we've talked about the entries. Let's go ahead and talk about some of the other parameters on this. All right? On the Dow, my initial stop is always 20 points. I don't like to go less than that because what I found is that on the pivots, you want to give it at least 20 points and give it some wiggle room. You can use 10-point stops and actually still have pretty good success with the pivots. But what's going to happen is that your ratio of stop outs is going to increase just enough to lessen the odds on these trades. And these trades actually have a pretty high ratio of succeeding. Now the stop is not based on the pivot level, it's based on the entry level. So even though, let's say the pivot's 10,000 and my entry level is 10,003, my stop is going to be 10,083. It's going to be 20 points below my entry. So now what I like to do is, if I'm trading multiple contracts, what's really nice is that if you can get in at a pivot level, then when you get up to the next midpoint, you sell half, and then you move up your stop, and now you've got a lower risk trade where your next target is the next pivot level up, and you've still got a little bit of room below you because of where you placed your stop. And I love those trades because once you get in them, your risk is almost nothing. Let's look at an example of that. All right, so in this particular trade, let me see. Scott's got a question. Okay, Scott, if your radar screen is bullish and prices bounced from the near daily pivot level back to the midpoint, why don't you wait and see if the price is going to continue up, then when it failed to enter short as a market order? I think, okay, I see what you mean, Scott. Yeah, Scott, basically, if the radar screen is mixed, okay, if the radar screen is showing like a neutral day, then what I would do is what you're talking about is when I get to the midpoint, I'd end up taking almost all the position and then reversing and setting up a short, okay, and that's part of the strategy. However, if the radar screen is bullish, then I don't want to fight. I don't want to fight. I don't want to fight what's going on in the market. That's when I'll just start scaling out and looking for bigger targets. If that makes sense. Justin, they are separate, and when I go over scalper buys and sells, I'll talk about that tomorrow. Now remember, you can get a scalper sell. Scalper buys and sells, what will happen is like you can have an uptrend, and then the uptrend is going to pause for like 5 minutes, and you end up getting a scalper sell. And then it turns around 3 minutes later and goes back into a scalper buy. So basically the idea with scalper buys and sells is that you want to be in the trade first because you bought or sold a pivot level, and then you get the scalper buy or sell confirmation. Now if the market's just free falling, you can use the scalper buys and sells to get in and out of a trade that way. But we're jumping a little bit ahead of ourselves because we're going to be talking about that tomorrow. If you've been in the room, you've seen the scalper buys and sells, and I'm going to show you how to work those in conjunction with the pivots. Okay? Does everybody understand that on the stops, basically when to move them and how to move them? All right, so let's see here. So as you can see on this slide, basically what I'm doing is just kind of talking about the internals. And you're going to see one of the very important things that we're going to be doing on Monday is as we're trading live, we're going to be watching the radar screen live and interpreting it live and then setting up trades based on that. So it's just important to remember, if you guys have a trend that's rallying all day, well, what are you going to do? Are you going to focus on the buy side or the short side? Well, if the trend's rallying, that means the selling pressure is increasing. So if we get a market that's falling to a pivot level, I'm not going to be too crazy about buying that. And in fact, I'm going to look and see if that thing will potentially fail. And that's some of the things that we'll cover on Monday, is how to play the pivots like that. Because what I'm going to be doing in those situations, I'm just going to wait for the next sell setup. And the sell setup could be a pivot play, it could be a scalper sell, or it could be a squeeze plays. And the scalper sells and buys and then the squeeze plays, those are what we're going to cover tomorrow. But first you need to understand how the pivots work because we use those in conjunction with the pivots. Now basically for one of the things that I like to do, I've got a couple of rules for playing pivots. If I'm playing the pivots and I get 2 losers in a row, I quit using the strategy for the day. That's actually a pretty rare occurrence, but I know when that happens, I know that something's going on in the markets and the pivots are not working that particular day. With this system, what I do is I trade 1 contract for every $12,500 in my account. Now you can increase or decrease your volatility by adjusting this number. If you trade 1 per $5,000, then your volatility is going to be almost a little bit more than twice as much as my account. If you don't like that much volatility, you trade 1 contract for $25,000, and now your volatility is going to be cut in half. And I found, like with this system, these trades work out 83% of the time on average, and if you're using a scale-out method, you're giving yourself a little bit of an edge. And what I found also is that we were talking earlier about the opening gaps. If you can trade gaps with multiple contracts, like say you start off with 5 contracts, you can have a core position of like say 2 contracts for the gaps and then start peeling off contracts as you get to different pivot levels. So that's just an example of a way to use pivot levels in conjunction of say like a gap play. And that works out really well. The other key situation, what we just talked about, is you want to ignore new trade setups between 12 noon and 2 o'clock Eastern. This is the doldrums, this is the dead time. The best thing to do during these situations is to do no trading, or there's one trade I will take during the doldrums, and that's called a 5-minute squeeze, and that's something that we're going to talk about tomorrow. That's the only trade I will take during the doldrums on the stock indexes. I will play the euro and the bonds during the doldrums, but I will not initiate new trades in the stock indexes unless we get a 5-minute squeeze. To me, the 5-minute squeeze is the most powerful signal out there, and I never want to miss one of those. And again, we're going to be talking about that tomorrow on Sunday. So what I found with the pivots is that 2 things. First of all, if you found that in your own trading you've got a general weakness for impulsive trading or in general you just don't like staring at the computer, you can use a pure pivot-based strategy to basically conquer those habits and make yourself a better trader. Because with a pivot strategy, it's very methodical. You're not going to be using any market orders, and you're going to have to plan your trades in advance, which is those are all the natural inclinations of a professional trader. And by using the pivots, it forces you to act more like a professional trader. So again, it's a really good strategy to use if you found that you've got like a problem with impulsiveness or chasing the market. And also, too, instead of chasing the market, it forces you to sit there and be patient and let the market come to you. And that sets up generally better trading strategies. All right? So now that was the pivots. So what I want to do now is Hubert's going to talk a little bit about rolling pivots. And then tomorrow what we're going to do is we're going to jump right into the scalper buys and sells. Well, we'll talk about that here in a second. So let's get, what page is it, 362? All right, before I turn this over to Hubert, does anybody have any questions on any of the pivot stuff that I just covered? If not, what I'll do is I'm going to turn this over to Hubert, and then I'll come back. We'll get any closing questions, and then that'll be a wrap up for the day.
I think mine's like 2 slides, dude.
Okay.
You're gonna be right back there, dude. Okay, all right. Those are like intraday plays. These are like scalp plays, so I'm going to show you. And there's a couple tools that I use for pivots, and they're called hourly rolling pivots. And all they do is they automatically calculate every 60 minutes the pivots. Like you guys just heard John explain how he uses the daily, the monthly, the weekly, and all that stuff. Well, I'm a little bit more short term, so I use the hourly rolling pivots. Especially when the market's sideways. Oh, the page is 362. Alright. So they're really good for range days, and I just look for R1 and R2 and S1 and R2. And then what it does is it automatically calculates it every 60 minutes, okay? So here's a snapshot of it, okay? And as you can see, R1's going to be green every time. And as you can see, there was a good trade here, there was a fade here, and then the S1's here, there's a good fade here. There's also a good fade here, back down to R1. So every 60 minutes, this thing is calculating pivots for me. I don't have to do anything. What I'll do is I got it on a 2-minute chart. Then I underlay a 60-minute chart underneath the 2-minute chart in TradeStation. And if you guys don't know how to do that, I can show you. It's pretty easy. We don't actually sell this one, but a programmer that does some work for us sells it. It's only like $100, but it's worth its weight in gold. So as you can see, the green is the R1 throughout the day. Every hour it's calculating. The black line here is R2. The red line is S1. And then S2 is the purple line. He does not have it for eSignal, but we are getting it programmed for eSignal. I know that it is in the works. No problem. Okay. So now, obviously, John just spent over an hour going over pivots. All this is an hourly version. It's just, for scalpers like me, it's a dream, because you can just trade the corners is what I call it. You know, you can sell R1 and you can cover it at the midpoint, or it also does the midpoint. The midpoint is this red dot here. Okay, you can sell R1 here. You can ride it to the midpoint, and then you can also take it down to S1 or S2. Exactly. That's exactly what it does. So every 60 minutes, this thing's throwing new lines on my chart in real time. So it'll take it based on the last hour's pivots. That's exactly what it does, Malcolm. Yeah. The question is, so is it calculated? So it's calculated based on the hourly high-low close for each hour. Yes, it is. You guys got any questions on this? I use it the exact same way, just a little bit modified version of what John does. Shorter time frame trades. It's actually like trading pivots within pivots. Yes, they are. The main things that floor traders that trade in the CBOT look at are market profile. In this order, they look at the Globex high and lows. And the reason I know this is I call them and ask them. The traders that I know, I'll be like, what the heck are you guys looking at down there? And they're like, listen, here's what the majority of people looks at. The Globex high and lows, they all mark those. And they all have the pivots, and then they all look at market profile, And then they also look at hourly rolling pivots. Some of them calculate those. And then they've also, most of them have their own homegrown type system too that they'll calculate, and they'll write down on their handhelds, okay? Or they'll subscribe to a service that's giving them input throughout the day, whether it be a nightly newsletter system or somebody else's technical analysis view that they'll have on their handheld too, that they'll read the night before and stuff, okay? So yeah, they do look at them. But those are the things that the pit guys are looking at. And you don't really want to... The bad thing about... Don't get caught up in what the pit's doing. Trading in the pit and trading behind the screen is two totally different animals. Trading in the pit requires one set of skills. Trading behind the screen is totally different, because we actually train a lot of people that have been pit traders that can't trade behind the screen, okay? Yeah, that's right. I do not calculate it for R3 just because... If it gets to R3, there's been a technical breakdown, and the indicator's set up only to go to R2, correct, and S2. It will not go to R3 or R3 or S2. Although I probably could call Joe and he would fix it for us. You guys got any questions on that one? All right, let's move on. Here's another example, just another example. I'll try to give you guys 2 or 3 examples on everything. Oh, here's the midpoint. The midpoint's calculated. You can't see it's a white line, Malcolm. The midpoint is usually right in here. It's just you can't see it because it's a white chart. And we did it in the PowerPoint to make it simpler for you guys to view in the manual as opposed to a black chart. So here's another example of hourly rollers. You can see how good or how bad that they did work. They are fairly accurate. I do use them a lot on choppy days. They work really good on sideways days. Okay. Alright, now, this is another tool I use that Joe has. It's called Trend Retrace. Okay. And I have this on my radar screen. It's called a Trend Retrace, and use the Trend Retrace tool. It's in a strong uptrend. As long as the trend does not break 9 to 12, it's a very strong trend. If it stays within a trend of 9 to 18%, you can usually buy it back to 18% pullback on a Fibonacci retracement. If it breaks 18, it's going straight to 24, and then it's usually going from 24 to 38. Those are just my observations, and I've sat and stared at this thing all day long. You guys can go through and read that, and I'm going to show you a little representation of a chart on this next slide here. This tool is called Trend Retrace, and as you can see, it automatically in real time draws for me well, the market opens at 9:30, Jammer, so it'll be 9:30, 10:30, 10:30, 11:30. You got it? Okay. Alright, so Trend Retrace works like this. It automatically calculates me from the low to the high, or from the high to the low, and it will automatically give me the Fibonacci retracement. So as you can see on this one, it's calculating it from the low here to the high here. It was at a 6% pullback. This hash mark's a 24% pullback. This hash mark right here is 38. This is a 50, and this is a 62. Let me draw this on here. You can see these little hash marks right here. This little hash mark right here is a 24. This one here is a 38. Here's a 50. Here's a 62. And this thing calculates it for me automatically in real time. I never have to think about it. And I've just got it on my flat panels. I've got it noted the previous stats on this one right here. 9 to 12 is a very strong market. If it does not break 12, you can buy it and it'll just continue. If it breaks an 18% pullback, then it's probably going straight to 24, and 24 to 38. Okay, so that's how I pull. That's how I buy strong pullbacks. Okay, a strong market with very small pullbacks. All right. Then we've got. Let me forward through real quick here. I've got John. You want me to cover fib clusters at all?
Sure.
It's like 2 slides. Fib clusters. I use a couple of different programs, and we're almost done with our own that automatically does all the fib clusters on a weekly. Justin A. I'm not sure. What do you understand? Have to subscribe to it for eSignal? Oh, for right now I'm working on the fib cluster software for TradeStation. I don't understand. Oh, so no, I post them in our live audio and video chat room every day. The fib clusters. The software, you don't really have to subscribe to it. Which software are you talking about, Justin? You talking about the Trend Retrace? Oh, the Trend Retrace. Yeah, you can just buy it straight from Joe. It's like $100. You can buy it for TradeStation. It's like $100. The hourly rolling pivots are $100, and then the Trend Retrace is $100 too. And I'll send you guys links at the end of the seminar on Monday or Sunday, so that you guys can know where his site's at and everything. He's just a TradeStation guy. He doesn't have anything for eSignal. We can probably twist his arm though. He might do it. So fib clusters are just all the retracements, the extensions, and alternates on weekly, daily, hourly. These are the time frames I use. I use a weekly, a daily, an 89, an 81, a 60, a 45, a 15, a 45, a 30, a 15, and a 5. And I automatically use about 3 pieces of software that I've kind of consolidated into one. It'll automatically give me the Fibonacci clusters. Okay, so it's a cluster is where there's a bunch of fibs stacked on top of each other, okay, where you have confluence areas. And this is what it looks like, okay? So, and I just turn them into red and blue lines in the actual chat room, and you can see them every day. The blue is support and red is resistance. And when I did this one, the thicker blue ones denote stronger support and stronger resistance. And as you can see, when I did this one last, we were holding support and resistance. We were just banging in there, okay? So they were very accurate, very, very useful tool. I use Fibonacci clusters the way John used pivots, okay? That's pretty much the exact same way I do. At resistance areas, I'm fading resistance areas, and I'm buying support areas. I'll be fading resistance and buying support, okay? So that's all I do. And I'll actually use them if I'm in a scalp and it turns into a good intraday trade. For an intraday target, I'll use the fib cluster numbers for my targets, okay? And you'll see more of it on Monday when we trade live. Candlesticks and stuff like that, I'm going to hold over until tomorrow. It's pretty simple stuff, but we've got a couple of ways of recognizing them in, as opposed to having to take 4 different courses on candlesticks and stuff like that. So I'll turn it back over to John. Anybody else got any questions? The fib clusters, I do them every night at the close. Usually if I can do them on Sunday, they'll last for a solid week unless there's something major that develops. But they're usually good for a week. Yeah, on the Trend Retrace, I'm looking... on the Trend Retrace, I'm looking for a pullback on a trending day, whether it be up or down. I don't want it to break 19%. If it breaks 19%, the pullback's too strong for me to think about buying. Okay, then I actually start thinking about flipping and going the other direction. How do you get the fib clusters on your screen? I physically draw them on my screen. I take the 3 programs that I use that calculates them manually, and then I manually draw them on my screen. And it takes, on Sunday, it takes anywhere from 30 to, anywhere from 15 to 30 minutes. And I'm usually done for the week unless something wild develops and you get another retracement or something. Question is, do I assume correctly that the fib clusters do not reflect intraday swings? Yes, they do. We use them intraday all the time. all the time. I mean, you can use, because I'm getting them from so many different time frames, I'm getting them from the weekly, the daily. It's not a fib level. That's just my observation of if it does not break a 19% pullback, it's not going to go to the 24. Okay? That's just a little scalper secret technique that you just pick up over years of experience. Oh, can I state the fib levels again? Or are you talking about basic fib levels? But no, the fib levels, Roger K., they can be used intraday, daily, swing. They're very good on any time frame. I use them just to scalp off of intraday and to do swing trades too. Can you state the fib levels again? I can scroll back here. Are you talking about these? Are you talking about the 24, the 38, the 50, and the 62? Or are you talking about my pullback numbers? Okay, pullback numbers are... Hold on just a second. Alright, so pullback numbers, they're on slide 365. And here's the pullback numbers. On a strong day, on a very strong day, the market will only pull back 9 to 12% on a pullback, okay? So it'll be 9 to 12%. And on a strong day, but where it's doing measured retracements, you can buy the 9 to 18% retracement. So what I'm saying is, as long as it does not break 18 and 19% retracements, I will buy it. If it breaks the 18 and the 19% retracement, I can't touch the pullback. Okay? I'll have to wait until it goes to a 24 or a 38 before I can buy it. And these are just pure scalps. And when I'm talking scalps, I'm thinking, 5, 10, 15, 20 points in the Dow Minis. Is there a fib program that will calculate these levels the way you're doing it? Yeah, Justin. What data feed do you use, Justin? Yeah, I mean, our programmer sells them. You talking about the 9? Now let me fast forward. Look here. Can you see this chart right here? This chart's how the tool works that I use. It calculates the 24, the 30, the 50, and the 62. This right here will be displayed in real time all day long. Okay? Where it says current trend retrace 6%. It does it in real time. You just have to sit there and watch it. As long as it doesn't break 19, you're good to go. Oh, is there a fib program that will calculate these levels the way you're doing it based on weekly data, etc.? We are actually designing our own in-house that works the way that I use them, and it should be out. It should be out in the next 2 to 4 weeks, and it'll work with TradeStation first, and then it will work with eSignal. I'm doing it for TradeStation first because I've got more TradeStation programmers on staff than I do eSignal. The time frames that I use for TradeStation or for fib clusters are weekly, daily, 89 minute, 81 minute, 60 minute, 45, 30, 15, and 5. Okay? And then what it'll do is it'll automatically calculate them for me, and then I have to pick out the ones that are sitting on top of each other. There is a little work involved, but it's well worth it. No problem. Rolling pivots, Dow mini trades, 10-point stops on everything for me. I don't vary it. I hardly ever vary it from 10 points. I will on special occasions, but usually it's 10 points solid. And then I've also got the 3 rule in effect. Like, you know, if I have 3 losers in a row, I sit down, I'm done for the day. I'm going to go ahead and fly through candles, man. You don't want to? All right. All right, I'm going to turn it back over to John, and I will see you guys tomorrow.
All right, so that's basically everything for day one. We're going to have, we've still got a lot of material to cover for tomorrow. And then the whole idea is that we're going to be utilizing, you know, all the information presented today, all the information presented tomorrow. We're going to combine it all and then do live trading on Monday. So if you guys have any questions, you know, please feel free to ask. If tomorrow morning, you know, if after you've digested this material, something doesn't make sense, let's make sure you're clear and get on the same page before we move forward. But basically all this stuff just builds on top of each other. And so tomorrow we're going to start going into some new plays that, you know, it'll help you to understand gaps and understand pivots and all the stuff that we've talked about before going into these new plays. Okay? So if you guys have any questions, just, you know, we can hang around here a little bit and answer questions. Otherwise, we will see you bright and early tomorrow. All right? Yeah, you guys, great questions that you guys had, and you know, have a pleasant Saturday night. Yeah, Bradley, mine does too. A beer sounds good. Yeah, no problem. If you guys, as we go through all this stuff and you need specific parameters on some of the stuff that we use, we can tell you what we have and stuff like that, based on what some of the programmers will let us release. You see, Bradley, he's like, I need a beer. I've got a brain hernia.
That's pretty funny. Ask Malcolm what he's talking about.
Well, I'll go ahead and cut this off.
Okay.
And then, all right, I'm going to stop the recording here for the.
This probably work though.
Yeah, I'll stop the recording here for today, and we'll pick up for tomorrow for the archives. And you guys have, you know, have a great night. If you guys have any additional questions, we'll hang out here for a little bit.